Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and sophisticated trading algorithms like our SPY system you see right here. We've been doing that since 2003 for individual traders and professional institutions, some of which I consult with on a weekly basis. Anyway, let's go ahead and get right into it. I haven't done a video for a little while for YouTube. The market has certainly been extremely volatile. I've been focusing on taking care of our subscribers at Breakpoint Trades, as you can imagine. And by the way, please consider taking a membership at Breakpoint Trades, or you can also sign up for our free newsletter if you haven't done so. I usually send out about a free newsletter once a week or so. All right. Anyway, let's go ahead and record. I'm going to go through my newsletter analysis that I record for my clients. This is my back end that I record from for our general web-based newsletters. So let's go and get this started here. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Monday, January 31st, last day of the month newsletter. As you can see via the table of contents here, this newsletter is divided into 4 major sections. I'm going to make some brief comments about the market here, but the first items we're going to get into are the SPY and ES systems. These reversion to mean systems have done some great trades and probably going to change up what I've been doing for this fairly soon for the year. That's going to be a benefit to all of us. I'll discuss that in a minute. But anyway, as far as the market, you can see what the newsletter is divided into. We're going to cover the general market, look at the indexes in depth, give you my opinion on what I think is going to happen. I think we've done a damn good job about navigating this market. We'll look at a few indicators. Also going to go over the sectors again, just like I did on the weekend, show you where they ended up with today's big rally. We'll look at the dollar, commodities, precious metals, which, believe it or not, they actually had a nice day. Look at trade ideas. Quite honestly, didn't add very much for trade ideas because you could have bought anything today. You could have thrown a dart at something. Heck, I had Netflix coming into today because it was so oversold. I had Overstock, I had UPRO, I had TNA, TQQ. I had a bunch of longs coming into today, which worked out very nicely. Okay. Now, before I get into the SPY and ES systems, as far as the general market, as you know, last week, the market sold off into Monday morning. It formed a trade low on Monday, which if you go back and listen to my newsletter on Monday, I stated as much. I stated that I thought Monday's low would hold for some sort of trade low. And that's essentially what it did. It traded sideways all week within that range. We also had a symmetry break after Monday's low. And so that also gave high odds of a higher low in the market, which we got. We got that on Friday. The S&P pulled back into a support zone. We then started a very strong rally Friday afternoon into Friday's close, okay? And we did a very good job about pointing that out to you in real time on the trading community, okay? If you listen to my weekend newsletter, I favored a follow-through rally from Friday, which we got today in a big way. You know, the S&P was up almost 90 points today. It's what we call one of those, or I like to call it, rip your face off rallies. Those kind of things occur when the indexes are super stretched, oversold, below their short-term moving averages, like a rubber band effect. Also, bearish sentiment was extreme. Goldman Sachs showed a record number of puts out there, something like $1 trillion worth. So everything was set up for one of these rip your face off rallies. Our SPY systems went long into that. They did good. By the way, they all closed out their trades today. So anyway, I favored follow through on Friday's rally, which we got today. Now, what am I favoring right now? The S&P made it into my first target zone, this 45-25 area. That was a 1-to-1 symmetry target from the lows. Okay. Today was also an 80% day. That's a positive. If we can get another one of those, that would be another very good positive for a possible bullish scenario. We're monitoring a couple of different scenarios where the market could form a right shoulder of a bigger head and shoulders top, and also a scenario where, heck, we could even go back to the highs again. But we're going to take it one day at a time, one level at a time, we like to say. But I am favoring more upside, possibly the 45.75 to 4600 area, maybe even to the 46.50 area. The confluence of a downtrend line and the 20-50-day moving averages. Okay, that's kind of my target area. Again, I'll go over that when I get to the S&P charts below. The S&P regained its 200-day moving average today in a big way. The triple Qs and IWM did not, but they were the most oversold. Okay, so let's get started and talk about our SPY systems and ES systems. So this first image below shows the 11 long systems for the SPY systems. So the SPY systems, again, if you happen to be on YouTube or you happen to be new, the SPY system isn't one system. It's a collection of 22 subsystems, individual systems. They're all their own system, but I approach them in this shotgun approach where all these individual systems are their own system looking to do their own thing. And it's a way to risk management because you have all these systems doing their own thing. The odds of one system getting out of sync with the market is very low. The systems are mostly reversion to mean, meaning they look to buy pullbacks like this when things get very stretched to the downside or short rallies and downtrends, things like that. You can see the various names of the systems. RSI oversold, that's pretty self-explanatory. Looks at an RSI for some sort of entry, along with a combination of other things. Bear exhaust, that tends to be a very oversold condition in a bear market. We're not going to see any of those trades anytime soon. Swing Momo, that tends to only be long trades and very strong uptrends. We're not going to see anything like that. But anyway, the systems here all have anywhere from 85 to well over 90% winning trades, going back to the 1990s. But anyway, you can see here that the systems in January, the trend pullback, took a long entry back here in early January for a quick reversion to mean trade. It was a profitable trade. It got out in time as the market then sold off. Then we had some of these other systems trigger. We had the QEBTS here, and it took 3 entries, albeit it took the entries a little bit too early here. The third entry ended up being a winning trade, which we got. That closed out this morning. Okay. The RSI oversold system did better. So this is an example of how the systems, can help offset, trades from other systems. This system was early, but this system here, the RSI oversold, would have taken a long trade on last week on Monday and then one on Thursday. And it closed out today at the close. So very nice, big winning trade there. It went back to cash. Also, this bullish exhaust went long on Thursday for a winning trade there. So all the systems here are now back in cash. These systems here exiting back to cash is not a sell signal on the market, guys. Do not construe that. Remember, the way to think about these systems are kind of like a tiger in the weeds waiting for its prey. It looks for these trade opportunities based on statistics. It sees the opportunity, gets in, gets the trade, gets out, waits back in cash, goes back in the bushes, waits for the next trade opportunity. They're in cash most of the time. They're not trending systems trying to catch the whole trends. Okay. Next. Image number 3. This shows you our ES systems. So it's the same long systems that I use for SPY, but I use on ES futures. And this actually did better than the SPY systems this time. You can see the bull exhaust did a trade just like on SPY. The CCI oversold took 2 entries last week for a winner. The RSI oversold had the same trade as the SPY. The QEBTS had 3 entries, but it did better as the second and third entry were winners. Only the first entry was a slight loser. And the way we do these trades is we double up on the second entry, triple up on the third. So as far as ETFs, we would take SPY for the first entry, SSO for the second entry, UPRO for the third entry. But the reason why I'm showing you this is because for the website Breakpoint Trades, I've been sending trade notifications for our SPY systems. I am considering adding the ES systems in here as well. A lot of times they're going to do very similar or the same trades, but overall I think they average each other out and offset each other very well. Sometimes the ES systems catch nice trades the SPY systems don't catch. Sometimes SPY catches trades the ES systems don't catch. The way I would do it for the website is that ES system trades, we would simply do the ETFs, not ES futures. Okay. All right, so that's enough of that. All these systems are back in cash. Let's go and get back to the general market. So item number 4, this shows the index sector table, what transpired today. As you can see, a lot of green here. One of these rip your face off rallies. The Dow lagged. It was only up 1.2%. S&P up 1.9%. Clearly the big gains percentage-wise were in the NASDAQ, up 3.4%. NASDAQ 100, 3.3%. And the small caps, Russell, up 3.1%. As far as the major market sectors here, we follow 21 of them. All of them were up except for oil services. Remember, oil, energy were leading the last few weeks. So they've getting a little bit tired. Not surprised to see them not up that much today. But big gains here in a lot of these. They were very oversold, especially semiconductors, up almost 5.5%. Currencies, US dollar down 0.7%. Had a big week last week, big decline today. Cryptos here were kind of mixed, but the stocks did fairly well, like Mara, which is one I'll go over tonight. Commodities, mostly to the upside, is the energy area, crude oil, natural gas. It's been cold in the Northeast, so that affects that. Copper slightly up, DBA. The agriculture is quite a bit down here, as you can see. And precious metals were up today. Gold and silver and GDX came roaring back, up 3%. So it outperformed the metals. The bonds below, high yield corporate, TLT down, or basically flat for the day. Or TLT flat, high yield corporate flat, TLT down. By the way, high yield corporate really didn't participate with the market today. Next. Item number 5 shows the economic news calendar. Plenty on the docket this week. ISM. Tomorrow we have initial jobless claims. We have the job non-farm payroll reports on Friday, and we have a slew of earnings. Tomorrow we have Google. We have Amazon, I think, on the 3rd. A lot of companies reporting now. All right, let's go to the charts. First chart below, item number 6. This is a monthly snapshot of the major indexes. Again, it's the end of the month. So I just wanted to show you how the month fared. Obviously, we came well off the lows. You can see these big candle wicks, but clearly the month was down. Okay, and sometimes as January goes, the whole year can go. So let's take a look at that. Chart 7, here's the monthly S&P. So the monthly S&P was down basically 5.25% for the month. It was down about 11% at the lows here last Monday. Next, item number 8 here. This table I showed on the weekend, want to recover it now since today is the end of January. This is a table that I've been keeping for the last 16 years or so. It's my January statistics, okay? And I had an error, or I had a little typo on the weekend, so I want to go over that. But basically, what I show here is all the years in the S&P back to 1950 where you had a down January, okay? So here's 2021. It closed down 5.3% for the month, okay? You can see quite a few years were down much more, all right? Now, it's been said sometimes as the month of January goes, so does the whole year. Well, you got to look more at the statistics. So what I did here is I put in the previous years, the gain loss, if there were the consecutive number. So for example, in 2000, the market, what the 5 means is the market was up 5 consecutive years in a row. That's a very rare thing to happen, market to be up 5 years in a row. So along with a down January, not surprising that the year for 2000 ended down. And of course, that started that tech bubble bear market. 2008, the market had been up 5 consecutive years as well. So that also started that bear market, but January was down. 1953, you had 4 consecutive up years. So again, market was tired. It was ready for some pullback anyway. You had a slight down January and of course down for the year. Now, 2021, you had 3 consecutive up years. So the market again was up in 2019, 20, 21, 2018. It was up 3 years in a row. So all these previous years where you had the down January, the market had been up the previous 3 consecutive years. So you could see all these years ended up with a down year. Okay. So this puts odds higher that 2021 will end the year perhaps down. Again, a lot can go on in the middle of the year. All right. Now, once you get to only 2 consecutive years, 1 consecutive year, then the stats aren't as strong. If you look at 2 years, it's kind of 50-50, and even less for 1 year. And of course, if you had a down year or even 2 down years, then the stats don't mean anything. If the market's been down 2 years in a row, that almost never happens. That's the time to buy. But odds do favor now with the down January and 3 consecutive previous up years that 2021, by the end of December, could end up being a down year overall. But I expect a lot of volatility in the middle. Next. Chart number 9, here's the daily view of the index. Again, you can see the big follow-through candles today. S&P, Dow, NDX sliced right. All these sliced right above their 9 EMAs. NASDAQ right to this little area, which is a resistance. The IWM below here, this would be a target area. This previous support is now resistance. May appear around 209 would be my target. Next. Chart number 10, here's a chart table from Goldman Sachs. It talked about how, and I'm not sure where the source came from here. I think it came from Zero Hedge. Someone sent this to me, but you could see the sheer number of puts that were being bought. Quite honestly, guys, you had so much bearish sentiment. A lot of people were shorting, hedging. And that when you get that and the market turns, that can lead to these big rip your face off rallies like we saw today. Next. Chart number 11, here's the Dow. Again, big move up, closed back above its 200-day moving average. The 20, 50-day moving average is up here. I think could be a target sometime during this rally. Either we go straight there or maybe some sort of zigzag. You can see last week it bounced off this support zone. Next. Chart number 12, here's the daily S&P. Again, as you know, to our subscribers, we pointed out this head and shoulder pattern way back in early January. That played out. It more than exceeded its target. You can see last week we got that big thrust down on Monday. We had the initial rally up. This rally was larger than that first rally. That was a symmetry break. Remember in my symmetry video, you break symmetry, odds favor a higher low, which we got on Friday. Then today, a big follow-through rally. So our initial target here based on a symmetry target would be right up around this 42.25, which we essentially tagged today. Okay. Even with today's rally, the moving average ribbon is still pretty wide, which I think still needs to be worked off. So I could still see this working up higher. So let's take a look at the next chart. Chart number 13, here's another daily view of the Dow or the S&P again. So here's an area I'm perhaps targeting. We had this channel, which we lost back here. Extend this trend line out. This is a resistance area. You have the 20-day moving average here in blue. You have a downtrend line here. Kind of this confluential resistance up here is my target area, and maybe even the 50-day. Again, might not go straight there. Maybe pause here. But this could be a target area. And this is something we talked about bulls being trapped up in this range. And then actually some bears trapped down here now. That provides fuel for the fire. Again, like I said, the ribbon is still pretty wide here. when the ribbons get too wide, they need to be worked off. And you get powerful moves when the ribbons are pinched like that. The ribbon's far from a pinching condition. If you get a pinching condition from the underside, that could be a low risk short. Right now, it's not. Obviously, we gained the 200-day moving average on Friday. Big follow through today. Again, short term, this 20-day moving average I think could be a target. Next. Chart number 14, here's a 2-hour time frame. So, a couple things in this chart. You can see that moving average ribbon pinch back here, mid-January. By the way, that provided a beautiful low-risk short opportunity. The first rally there was 167 points. We sold off. We lost that neckline support here. Big sell-off into last Monday. By the way, price at that time was below its Bollinger Bands here, 4 bars. That was quite stretched. The initial rally, 195 points. That was a break in Symmetry. Remember, when you break Symmetry, you have high odds of a higher low forming. That's why I favored a higher low to form last week, which we did technically on Friday. It was a deep pullback, but we got the higher low. In fact, right there, guys, use this as a education. You had a MACD pinch and stochastic oversold. I call that a MACD kiss, stochastic oversold long. That was an extremely low risk long right here where you could have put a stop right there. Then we took off on Friday, big follow through today. Again, measuring this rally from Monday's low to the midweek high. That gives you initial Symmetry target right up here around the 45.25 area. Next. Chart 25 or 15, there's another 2-hour chart. Shows you the same thing, just zoomed out a little bit. Next. Chart 16, there's a 60-minute chart. Again, we took out this resistance today around the 4,500 area. People were watching that, but I thought we'd slice through that, and we did. This candle right here on the 19th, 20th, there's really no resistance here. So, again, that's why we have an easy shot at least up into this area. Next. Chart 17, here's a 15-minute chart. You know, we broke this trend line on Friday. And this is why we favored also a higher low last week. That rally off Monday's lows had 5 waves. That was either a wave A or 1. And that favored a wave ABC pullback, which we got into Friday, into this area. It was a deep pullback, but these wave Bs or 2s can be deep. We rallied on Friday, started that wave 3 Friday afternoon. I thought we'd follow through on a wave 3, and we did today. Took out this little resistance area. These are your next little target areas in the short term. 45.30, 45.60. And like I said, 4,600, whatever, you know, the daily chart above with those confluence trend lines. Next. Chart 18, here's the 10-minute chart. We had kind of an inverse head and shoulder pattern there as well. Finally, chart 19, here's a 5-minute view. And you can see today's action, basically a trend type day. Congrats if you guys bought Friday held, or if you bought today this morning right away. Or if you're along our SPY systems, they came in today long. Next. Chart 20. These 4 charts show our cycles. So here's the S&P daily. Down here, last week we had a DeMark 9 midweek. That, you know, along with the DeMark 9, the really wide ribbon here led to, you know, a decent rally. I think we can make it maybe up into this range. Here's the ATR. Here's your half day. Your 2-hour broke above its ATR today. And last week, the 60-minute was above the ATR with an end of bull cycle, and that played out. Next. Chart 21, here's the triple Qs. Big old rally today, slicing right through that 9 EMA. In fact, it broke this little Symmetry, this move to here. So that's a positive. Short-term target, 200-day moving average, then the 20-day. Okay. Moving average ribbon is still very wide despite this rally. So I don't think the market I don't think the Qs just roll over here. I think it has higher to work over time. Next. Chart 22, here's the zoomed out view with the symmetry. As you know, I've been showing this, how this recent sell-off from the highs last year essentially matched on a point value the pullback from February to March 2020. Perfect symmetry there, and that's where the Qs found support. Now again, you have a confluence of resistance right in here, and of course you have this broken channel. So Qs, like I said, 20-day moving average here at your first target. I think over time it may want to test this trend, a broken channel trend line up here. Next, chart 23, here's a 60-minute chart. We exceeded this initial symmetry. Thin zone in here, so 370 would be maybe first target short term. Next, chart 24, here's the various cycle time frames. Basically look like the S&P. Short term, we got a little to mark 13, so maybe a little overbought short term here on the 60. ATR is your support. Next, chart 25, IWM small caps. They made a new low last Friday, but had a divergent low. By the way, this area, broken support, would be a target of mine on a rally. I think it can make it up into this area. That's big resistance. Next, chart 26, here's a zoomed in daily. The bullish view would have this as some sort of big ABC decline. We'll see. But we did have 5 waves on this decline. We had a divergent low. You can see the RSI divergence. Also divergence on the stochastic here. So I think over time this works to the 20-day and buck to this trend line up here. Finally, chart 27, here's a 2-hour chart. So far, IWM basically matching a symmetry back here. You can see last week how it had a nice MACD divergence, RSI divergence. This is your main resistance on a continued follow-through move. Okay, so that does it for the indexes, guys. Now let's move on. Chart 28, here's the VIX. So the VIX gave a buy signal last Thursday when it closed back inside its bands. That ended up playing out nicely, didn't it? The VIX was above its upper Bollinger Bands for 7 consecutive days. Basically one for the records. Next, chart 29, here's the VIX. A better way, easier way to look at it with the Bollinger Bands. Again, it was 7 days consecutive above its Bollinger Bands. So it was due to come back inside. When it come back inside, that was a buy signal last Thursday. Right here, obviously that played out in a big way. Next, chart 30, J&K High Yield Corporate. Despite today's rally, though, this area is really lagging. Be aware of that. Got to keep an eye on that. Big volume bar today, though. But this area is lagging big time. Next, chart 31, TLT. It's kind of stuck in this range. More like a diamond pattern, looks like. Next, chart 32. Here's the 10-year Treasury yield, kind of a diamond. We'll see which way this resolves. Next, let's look at the various market sectors. Since I didn't add many trade ideas tonight, I'm going to show you where these closed at. So XLE Energy, that's been the leading sector this year. It had broken symmetry back here. We identified that back in early January. So that's been the leading sector. Your buy opportunity was back there, or buying last week, that pullback to the 20-day here. Still holding up fairly strong here. Next, chart 34, banks bounced today, but still below its 9 EMA. So far, they've held their 200-day moving average, but still below its 9 EMA. Work to do. Next, chart 35, financials also bounced, but went over its 9 EMA, got the 50-day moving average here. Next, chart 36, transports. They had a divergent low last week. Nice rally today, back above the 9. 200-day is up here. Ribbon here is still quite stretched to the downside. Next, chart 37. XOK Technology, big rally back. In fact, came back above this broken trend line. Closing near its 20-day moving average, so stronger than the triple Qs. Take note of that. Next, Chart 38, XLC, communications sector, has a lot of those FANG type names. Big rally back today. It's been decimated, of course, since September. Closed between the 20 and the 9 EMA, so I think the 20-day above is its first target. Next, Chart 39, semiconductors. As you know, we had a rounded top back here, which was bearish. It played out, filled this thin zone. It had a big rally today, one of the strongest sectors. It was quite oversold down here last week. It had an RSI and stochastic divergence, so not surprised to see a pretty good snapback. Next, Chart 40, XBI, biotech. That was one of the weakest sectors last year and this year as well. But I do think it's a lower risk down here. You had some RSI divergence, stochastic divergence, CCI divergence. I took a shot at this. I own a little bit, got a stop in place. Next, Chart 41, LABU. That's the triple leveraged ETF. I own a little bit of this as well. Notice your MACD's trying to curl up here across. So I do believe you get some upside momentum, maybe to the 20-day moving average. Next, Chart 42, retail. Big up day today, 4%. Sliced right through its 9 EMA. That's your next resistance areas and 20-day moving average. Next, Chart 43, home builders. Also a nice day, coming from that divergent low. So these sectors were quite oversold with a divergence. Next, Chart 44, real estate. Also nice bounce back. Next, Chart 45, consumer discretionary. Big candle up. Again, guys, I'm just showing you what the individual sectors did since we just covered them on the weekend. Nice rally from that divergent low. Next, Chart 46, utilities. Big candle here. That's a big candle for utilities. Closed above its 20-day moving average today, in fact. Next, Chart 47, industrials. After the divergent low last week, right back to its broken trend line. 9 EMA is your next resistance. Finally, Chart 48, EWZ. That's the Brazil ETF. This is one that I've liked for a couple weeks. So it has continued rallying up. What I liked about it is it had a symmetry break back here in mid-January. It's coming out of a base here. You can see how the moving averages started curling up. Take a look at ribbon. It flipped bullishly stacked back then. So that's when I bought a position. Still own it. It's working its way higher. 200-day moving average is the first target area. This looks good. And it's done well despite the dollar being strong. Next, moving to commodities. Here's crude oil. Continues working higher. Possibly working on some sort of fifth wave move now. Still going up. Next, Chart 50, natural gas. It's had a nice rally over the last, week and a half. With the cold weather, not surprising. Next, Chart 51, copper. Basically a flat day. It's in this big coil on the weekly. No changes. Next, Chart 52, DBA. Basically flat today. The bullish view could have sort of a cup and handle here if it could take this resistance out. Next, Chart 53, soybeans. This is one of my best trades so far, that I like to tell people. Soybeans, we bought it back in December out of this bullish pennant. Higher low here, continues up. Next, Chart 54, soybeans monthly. It's up 11.3% for January. Hell of a mood for soybeans. Why did I like it a couple months ago? It broke out of a base, 2020, rallied up, pulled back to this area where it found support. This is where I liked it. Next, Chart 55, Bitcoin. This did bounce today, but not that much considering what the market did. What I'm monitoring now is these symmetry bounces. I would like to see, if symmetry can be broken, that would be a positive. Otherwise, Bitcoin essentially, this pullback matched the pullback, total pullback here, a symmetry, essentially. But short term, I'm monitoring the symmetry rallies here from this high. Next, Chart 56, there's the weekly chart showing the bigger symmetries. Next, Chart 57, Ethereum, I'm monitoring the Symmetry in purple. So far, we're matching it. Let's see if we can break it or not. It is a resistance here. Next, chart 58, Mara, the Christmas tree pattern. Mara, one of the Bitcoin stocks, 83.5 bucks back here. Hopefully certainly didn't ride it all the way down to 19 here. But this is one I thought was lower risk last week. Had a divergence, took a shot, followed through today. And I think this could still follow through if the cryptos hold up. Next, chart 59. Here's the logarithmic chart. So first off, a positive here, Mara, the Mara Bitcoin ratio. It's trying to break this. That's a positive. Now monitor the Symmetry bounces. If you can have a break in Symmetry here, needs to get above about 25, that would be bullish and indicative of a decent trade low. And then I would look to buy pullbacks. So monitor Symmetry now. But I got a position right now with a stop. Finally, chart 60, here's a 60-minute view. So I liked it last week as a low risk off this little double bottom. So far, it's given a trade. We'll see if we can get more. I'm watching for a possible Symmetry break ultimately. Next, chart 61, US dollar. So the dollar, it's been strong since last year. Recently found support here, logical area, big rally off. That's your next resistance, but a big pullback there today. Next, chart 62, gold. It's still stuck in this big weekly coil. Had a big ugly week last week, but we're still holding this coil for now. Monitor the ratio. If this ratio can break up, it still may have a chance, but we'll see. Next, chart 63, there's the daily view. Again, today the stocks outperformed, but you need more than a day. Next, chart 64, here's silver. Basically didn't do much today. Recent rallies have stalled at the 200-day moving average. Next, chart 65, GDX, big rally, snap back today. This is your critical support. It's got a lot of work to do ultimately. Next, chart 66, there's the 60-minute chart. So last week we pointed out a head and shoulder pattern which played out. Let's look at some individual names, Chart 67, BVN. So if the area can hold up, I like BVN here. We had it as a long idea back here, moved up. You have a potential falling wedge here. Your stop would essentially go at today's lows. Next, chart 68, GOLD. The big longer term wedge still holds for now. Monitor the ratio. Next, chart 69, SVM. Still holds, has this potential big weekly wedge pattern. Finally, chart 70, SBSW. This is another gold type stock. We did have a Symmetry break a couple weeks ago, which I said was a positive. And this one's outperforming. So I do like this one and BVN in particular. All right, following up with some names. So here's Apple, Crapple. Obviously, nice rally off this support area with earnings from last week. Next, chart 72, the weekly view of Apple. Like I said, even if you're long-term, have some sort of exit plan, stop. I think these higher lows are logical stop areas. So if I was long-term, this would be my stop. Next, chart 73, Google reports tomorrow. We'll see what Google does. Next, chart 74, Amazon, big rally back today finally. It reports on the 3rd. Next, chart 75, TSM. This is one I mentioned on the weekend and last week that I liked. I like this one fundamentally. It's had a pretty good haircut. Big move today into this area. This is a resistance now. Next, chart 76, Zim. One of these dividend plays I've liked. So it continues to move up nicely with the market. It's also got a low PE ratio. $10 dividend over a year, pays quarterly. Next, chart 77, John Deere. It's a decent longer term stock as well. Next, chart 78, Baba, one of the Chinese internet type stocks. Basically rallied off this support. I mentioned this one on the weekend. Next, chart 79, Nile. This is one I bought a position today. I mentioned it on our trading community. It broke a trend line here. That was enough for me to take a shot. The chairman of the board has been buying an insane amount of stock over the last 5 months, and they have a stock repurchase program. So let's take a look at that. Here's the insider purchases. Nile, again, they had a symbol change, used to be DPW, but look at all these insider purchases by this Alton Milton. Ridiculous purchases here over the last several months. His timing has sucked, but clearly, along with that and along with the stock repurchase, I was interested in buying some. And today with the trend line break, I went in and took a shot. Next, Chart 81, K-Web, one of these Chinese internet plays. I know China is kind of opposite right now. They're actually loosening instead of tightening, so maybe we have some sort of trade low there. Next, Chart 82, Netflix. This was a very good rally today, up 11%. This was quite oversold. This was one of the ones I had coming into today. It was so oversold, it was due for that. Next, Chart 83, Tesla. Tesla fans, nice big rally today, up 10.7%. Basically, you could see last week on Friday, it tagged this area that I was targeting. That was my support zone. Next, Chart 84, there's the 2-hour chart. Be aware, short term, it is meeting a symmetry area. Now, if it can break this, that would be a positive, but you can see the last rallies have stalled at symmetry. Next, here's a new name, VLO, energy name. They have a dividend, ex-dividend, I think, tomorrow. Next, Chart 86, CLF, Cleveland Cliffs, little trend line here. Remember, LABU, I think that's another one that could follow through. But anyway, guys, we'll see what happens tomorrow and this week. Been a crazy market. Take care. Have a wonderful evening.